This is a bold bet, right? I am making my winner for the week.
Welcome to Next Week on the Trading Floor. I'm your host here on Wealthion, and we're here to help you keep and grow your money. Next Week on the Trading Floor was developed to explore current trading ideas, market trends, and opportunities to watch. It's real-time insight to help you make informed decisions in the ever-evolving financial markets, and in conjunction with Market Rebellion, we'll give you stocks to watch that will help you in the week ahead. Now I'd like to welcome in Justin Nugent of Market Rebellion. Justin's an analyst. He's responsible for Rebel Roundup, 3 at 3, and all that good, all the information that Market Rebellion gives you. That's Justin, and that's why we have him here. So Justin, welcome to this week on the trading floor, next week on the trading floor.
Thank you so much, Andrew. It's an honor to be here.
So let's get right to it. Good financial information, I guess, that came out this week. The PPI came out, the CPI, which is what the Fed really keeps an eye on, slightly lower. Look, let's face it, the inflation's being a little bit stubborn, but it was slightly lower. Explain to us the ramifications of it coming in slightly lower.
Yeah, it's funny. The CPI didn't come in and say, we're great, inflation's over. It just wasn't a disaster. And so that means we're going to rally. We're back to all-time highs in the S&P, the NASDAQ, and the Dow. We're going to talk more about that later. But at the end of the day, when PPI came in, people got a little bit scared, and then we revised down March. And they said, okay, let's wait for the CPI. CPI comes in, and it shows that inflation's still here, but it is starting to abate. This is data that the Fed likes to see. The initial jobless claims came in, and we got that often said Goldilocks number where it's a little bit above expectations, but a little bit less than last week. That's good as well. So it's not surprising that we rallied a bit. The other exciting news of the week, part of the exciting thing to see is meme stock madness is back, guys. GME went from, $10.94 on the 1st of May up to 60 something and all the way back down to 20 again. AMC made a similar move, 291 all the way up to $6 and change and down. And suddenly across the whole market, all of these stocks that are highly shorted and very beaten down are starting to rally on no news. Why? Because a gentleman by the name of Roaring Kitty on Twitter has begun posting again. Is he posting some really in-depth market thesis on why these stocks should go up? No. He's posting memes. They're cryptic memes. He's posted about 100 of them. That's all it took. And just as soon as these stocks started to rally, we saw them start to come back down because people are starting to see he's not posting anything other than memes. And there are rumors. These are unsubstantiated. I don't know what the ramifications of these rumors are or how true they are, that, maybe this isn't the same guy. That's not what I'm saying. That's what's starting to propagate across social media because there's been no YouTube presence, which he had posted on very frequently before. There's no Wall Street Bets presence, which is a forum that he had used to propagate the first squeeze in GME or to draw attention to it. All right. So this is starting to look like maybe the meme stock madness might be subsiding. But one thing I just wanted to draw quick attention to is that at Market Rebellion, we focus on following the smart money. These are very large, unusual trades in the options market. Underneath the surface of where people are normally buying shares, there are big players, whales, who are buying very large bets that a stock might go up or down. And before GME ever popped off on April 24th, we started noticing some very large, unusual options activity in GME calls. Those are bets that GME is going to go up. And we saw it again and again and again, 5 separate times, with the stock still in the $10 and $11 range between April 24th and May 1st. These are options going for 20 cents that at the top of this rally traded up to $52.80. This is just a sign that sometimes these big moves in the market, somebody knows what's going to happen.
Yeah, it seems that way. And I will be the first to admit that I had no idea what a guy leaning forward in a chair with a game controller, if it was a game controller, what that meant. One of our viewers actually said it means he's back in the game. Keith Gill is back in the game. Now, like you said, we don't know if it's actually Keith Gill, or maybe it was someone who actually bought those options that said, look, I'm going to try and get in on this action and, post that meme. But like you said, there was more memes, stock popped, and AMC pops as well. But look, if you follow the smart money and do it that way, you have a much better bet of doing well with those options. And it's nice to see him back, I guess, and we'll see where it goes from here. And there's going to be Roaring Kitty 1, Roaring Kitty 2, and there's going to be a lot more people on Twitter or Reddit or whatever it is with a similar name, maybe with a letter spelled or turned around, and trying to make a stock pop here or there. But let's get into our predictions from last week, and pretty good. We had Citigroup, which did pretty well. I think that it was a good bet right there.
Yeah, absolutely. And what we're seeing in the options market, which is where we originally called out this move in Citi, which is up about 1% this week, right, is that they're rolling and staying with this trade. That means they're going out to the next expiration. They're staying on it. In some cases, they're actually adding money to this trade because they think it's still going to keep going.
So Justin, the unusual options activity you saw in Citi, you saw that it started to go up. Explain to us when you say, you can roll it or exit it. Explain to us what you mean by that.
Yeah, at Market Rebellion, we really believe in keeping our discipline about us at all times. So when you start to see money growing in this trade, you have two choices. You can roll it in order to lock in some of that profit while remaining in that trade. And by the way, that's what the smart money did. Or you can exit that and move on to the next trade. Now, as I said, what they're doing here is that they are rolling this trade. That means they're selling this option that we identified and simultaneously buying another option at a later expiration at a higher strike at a cheaper price so that they can take the difference, put that in their pocket, and then keep some exposure on this trade in case it keeps going up.
So that's awesome. Now, we went to one of our picks from last week, which was AppLovin. AppLovin didn't do as well as we thought it would.
Yeah, AppLovin, it's an interesting thesis because I think we all believe in the data center tailwind, right? But after you see a stock pop as hard as AppLovin did after earnings, it's natural to see some profit taking. These are people who maybe entered the trade ahead of earnings and are exiting now because that was their whole thesis, and that's okay. And maybe people who are already invested, and then after earnings comes out, AppLovin pops hard, and they perform the same type of discipline that we were talking about in Citi. They take a little bit of profit off the top. I don't think personally that this past week, where they're down a couple dollars, really invalidates the longer tailwind of data and data centers. As Mark said last week, you can't bet against big data. So I still like AppLovin here. Maybe not as a weekly trade, but certainly as an investment and perhaps as a quarterly trade as well.
Yeah, that brings me back to a trade that I think John told us about was Cameco, which, originally kind of stayed where it was, but now is starting to creep up again. So that's a perfect example of, look, if you hang on to these things, even though they may just go sideways for a little bit, they're going to eventually go back up. So Cameco, I think, was a good trade, up about $3 as we record this. The stock in the penalty box was Airbnb. Mark thinking that the summer travel season might not be as robust as we thought. And initially, the stock, when everything else was doing really well, hit 149, but dropped under 146. So wasn't entirely wrong there.
Absolutely. Yeah. When you see underperformance in the wake of everything hitting all-time highs and highly shorted names just ripping dozens of percent, and you see a stock trading flat or letting go of some gains, it's not a great sign. I think the same story from AppLovin is true about Airbnb, where those headwinds that Mark identified, particularly those regulatory headwinds, those still exist for Airbnb. But after you see a stock fall from 164 down to 145, it's natural that you maybe see some people starting to take a bite. Maybe they like Airbnb as a disruptor to the hotel story. Maybe they just want to see if they can buy the dip, catch the falling knife a little bit, whatever have you. I think it doesn't invalidate the potential headwinds that are facing Airbnb. And I think there could be more downside to go from here in that name.
So actually, last week wasn't a bad week, even though some of the numbers didn't pan out as good as we thought. It wasn't entirely a miss on the week. We actually had Citigroup that did well. AppLovin, we missed a little bit, but on the long side, we may end up seeing that grow and come back. And Airbnb still facing those headwinds, as you say. So let's get into our next week, and we're turning to AI for one of the winners for the week.
Yeah, absolutely. So this is a bold bet, right? I am making my winner for the week, Nvidia. Now, this is very binary. They report earnings next week, and we've seen a pretty fickle earnings season over this past quarter. All right. That means you can say, hey, I did great this past quarter, but you also need to say my guidance for next quarter, it's better than you thought it was. I think despite the China headwinds, that Nvidia is going to do that. And let me explain why. So SMH, obviously that's the semiconductor ETF. They drove the market for a while. At the start of March, they really got hit. They fell about 17% from peak to trough. They stayed in a downtrend for about 9 weeks. On the technical side, they broke out of that downtrend on May 6th. And now they're looking right in the face of those all-time highs again. And no doubt Nvidia is controlling the car for whether or not we get there. Okay. Why do I think Nvidia is going to report solid earnings? More than solid. Let's start with the fact that 4 of the largest companies on the planet, Apple, Microsoft, Meta, Alphabet, all come out this quarter and they say, we're going to increase our spending on AI. And that's not going to stop anytime soon. We're actually doing that even more next quarter. And the quarter after that, guess what? Still increasing our spending on AI. You look around and you say, who's the beneficiary of that AI spending? Maybe it'll be spread out across all the big AI chip companies. Here's the thing. We're starting to see some earnings from some of these AI chip companies, and we're seeing AMD, and we're seeing Intel, and we're seeing some other companies, and some of them are doing good and some of them are doing bad, but nobody's coming out and knocking it out of the park, right? AMD comes out and they say, we're just okay. We're not increasing our guidance in some crazy way. We're not announcing a mass of new orders. So who's left at this stage? It's Nvidia. The creators of the most powerful chip on the planet, which is also incredibly expensive and so sought after that it's actually sold out in several places, reportedly until 2025. Nvidia CEO Jensen Huang recently said, even if our competitors sold their chips for free, they would still be too expensive because our chips are that good. Those are fighting words, all right? The elephant in the room here is that, a lot of people hate to acknowledge this, but it's very important from a trading perspective, which is the possibility that Nvidia splits its stock. We know that this does not increase the intrinsic value of Nvidia's stock. But Nvidia has a history of rallying on these announcements. And if it comes on the back of a very solid earnings, that could definitely mean something. Jensen Huang recently gave an interview back in March where he teased the concept, saying that he likes stock splits, that they're good for employees, that he wants to take care of those employees. You know who else stock splits are great for? Momentum traders. All right. I said the last time that Nvidia split its stock, they rallied. How much? 35% from the announcement date to the split date. That's a lot. The very last thing of note is that back in March, on the same day that Nvidia got crushed, we identified a massive dip buyer, dropping nearly $1 billion with a B dollars on Nvidia June expiring 820 strike call options. Now that's a pretty short-term bet. To bet $1 billion on, that's a lot. All right. Since then, with the downtrend in place, you might have thought they sold those. They didn't. They actually did what we talked about in Citi. They rolled about half of them up to the 880 strike. That means that they think that Nvidia is still going to go up, and they left the remaining position down at the 820 strike. Both are still worth hundreds of millions of dollars. And they added capital in that roll. They added money. They doubled down. To this day, in all of Nvidia's options chain, these are the highest open interest options that exist. So my winner's Nvidia.
Nvidia right now trading over 900, so those options look pretty good at this point. So let's look at the loser at this point, and we head over to, I guess, Lucid Group, and I believe they're a car maker. Is that correct?
Exactly. Yeah.
EV.
Yes. So this is a lot simpler, and I took a lot of time with Nvidia, so I'll make this quick. Meme stock madness looks like it's at the end of its next chapter. But shorting GME and AMC in any form is kind of a recipe for disaster because shorting them, they're very hard to borrow. The options are very pricey. It's a big roll of the dice. You never know if Keith Gill, Roaring Kitty, whoever it is going to come out and say something that inspires some people to fight back against the hedge funds once again. But what about all these names that were beneficiaries on the side? You know, the Lucids, the highly shorted names that started to pop simply because other shorted names were starting to pop, but didn't have any news. I think these are going to begin their move back to the downside as traders who entered these positions, who entered these stocks, are starting to see, okay, maybe the squeeze isn't what I thought it would be. Let me take my profit. Let me take my loss, whatever that is. So I think Lucid is a beaten down name, which is probably going to get more beaten down this coming week.
So unusual options activity. I know that you guys, this is what you guys do. It's how you guys make your trades and what you watch for. And one of my favorite stores, Target, is on that list this week.
Yeah, absolutely. So if you noticed yesterday, Walmart came out and they smashed earnings. They said, yes, we beat our EPS. We beat our revenue. We're drawing in higher end consumers. We're keeping our lower cost consumers and we're upping our prices, and that's not hurting us. So we're looking good for next quarter, and we looked good last quarter. We're great. That has a lot of people saying, okay, who's kind of like Walmart that's reporting earnings? How about Target, another big box store? They're reporting earnings on the 22nd. Somebody came in and bought a very large quantity of call options. That's a bet that Target is going to go up. And these call options expired on May 31st. That's 9 days after they report earnings. All right. These were in the money at the 155 strike. So they're really putting a lot of cash and a lot of due diligence, a lot of discipline on these options. They're protecting themselves from the potential of what's called IV crush on earnings, which is where maybe the stock goes up a bit, but not enough to justify the options. That's not a thing for them. They're saying, we know what we're doing. We're betting a lot of money, and we think that Target is going to come out with earnings that were similar to Walmart and that they're going to go up quite a bit. As a last note, Target has topped out twice in 2023 and in 2024 at about $180. If you were going to look at a price target for Target, that's where you might consider looking.
So those are your stocks for the week. Nvidia also comes out with earnings on Wednesday the 22nd. So Target and Nvidia, the two winners of the week, pretty much, are both reporting on the same day. And Lucid Group is they're in the penalty box, as John would say. Yeah. So let's take a look real quick at the indexes, the S&P, the Dow, the Nasdaq, all intraday highs at one point this week. So recession way off in the distance, so to speak, or maybe the stock market is just saying, you know what, we don't care about that talk. We're just going to keep rolling.
Yeah, Bloomberg recently reported an interesting divergence where people are feeling increasingly more negative on the economy, but more positive on the stock market. This is something we've reported in the past, and it makes sense, because a lot of people don't really get that the reason why the economy is under pressure in part is because the Fed is putting it under pressure. But by seeing some of these negative headlines, they might signal that inflation is beginning to abate, and maybe the Fed takes its foot off the economy, and that allows everything to go hunky-dory. One thing that I would note, last week in the Rebel Roundup, I said that the retaking of the 50-day moving average in all four major indices, the Russell, the S&P, the Nasdaq, and the Dow, all on that Monday, combined with a bullish cross of the 8 and 21-day moving averages, were a sign that we were going to all-time highs pretty soon. That's exactly what happened. Why does that matter? Why should you maybe consider putting that on your chart? From November all the way through April, the 8 and 21 day moving averages stayed crossed bullishly. That means the 8 is above the 21, and it was a sign, a signal to buy in. We went from about 435 in the SPY up to about 510 in the SPY without them ever uncrossing. Now they're crossed again. In my opinion, all right, and I'm a lot more bullish than I think a lot of people out here are, I would stay long the SPY and the QQQ as long as that 8 and 21 day moving average is crossed bullishly, and as long as we're above that 50-day moving average. That allows you to tighten your risk, and it allows you a pretty big reward, and that's what we like to see as traders at Market Rebellion.
And if you want to see those averages and how they cross, you can go over to Rebel Research and take a look, because that's where you guys get a lot of that information. It's your own package and your own statistics, and that's how you can find out about all that stuff. Justin, thanks so much for joining us here on Next Week on the Trading Floor. It was informational, and I think that, look, we'll take a look at these stocks. We'll know better on the 22nd when some of these earnings come out for Nvidia and Target, and we'll see if these picks are going in the right direction.
Yes, sir. Thank you so much.
Thank you for watching Next Week on the Trading Floor. We hope you enjoyed the insights and forward-looking information from Justin and Market Rebellion. If you need help being financially resilient, please head over to Wealthion.com, sign up for a free, no-obligation portfolio review with one of our registered investment advisors. If you want to find out more about options trading, head on over to MarketRebellion.com, and remember to follow us, Justin and Market Rebellion, on social media for the latest news and information to help you invest wisely. If you could like and subscribe to the channel, we greatly appreciate it. Don't forget to hit the notification bell so you can find out when we post new videos to the channel. Thanks again for watching. We'll see you next week on the Trading Floor.